All right, hello everyone. I'm Dylan Silbernagel. This is Frank Roubaix. We are realtors with Keller Williams Realty Centers, and this is going to be your market update for the month of June. We are doing this on Friday, July the 19th, as we review the stats. So, as you know, things change as we go through the market. And last month we had a big update with our first interest rate cut. It was only 25 basis points. It ended up not making too much of a difference in the market, and I think you're going to see that really because it's not making the impact that we need in terms of affordability for buyers. So Frank's going to walk us here through a bit of the Market Watch report that we've got, which is a full update on what happened on the Toronto Real Estate Board for the month of June. So Frank, take it away. What are we looking at? What did we see last month?
Yeah, hi Dylan. Thanks for the introduction. Yeah, today we will talk about the market watch. So here you can see, like like all the indicators. For example, like the employment growth. You see the real estate GDP growth, 1.7% for the first quarter of the year. Um, also, we can see like the inflation is getting better than before,
Mm-hmm.
and this is only from the month of May. You can see that the interest has gone down
Mm-hmm.
now, uh, from the recent updates in July from the Bank of Canada. And here you can also see the sales uh, and the average price by major home type. You can see the detached homes in the GTA. They're going up like 1.7. That's the average price, and for condos, around 763K. Uh, Now we can. I like this chart because it gives you the sales by price range.
Mm-hmm.
It also shows you the house type. So it depends on the like what's the interest of your customers or clients. For example, I think the most two crowded or two popular types of properties are the detached and the condo apartment. For example, you can see in the highest sales in detached houses in the GTA, it's around 1 million to 1.249. So
Mm-hmm.
it's like around 1.25. So and also for the condo apartments, you will notice that the highest price, it's in the range of 500 to 600.
Yeah, that's where we're seeing the bulk of the sales right now are units that are selling between the range of 500 and 600,000, which says to me it's still the one bedroom unit that most people are purchasing at that price point.
Exactly.
Yeah. Yeah.
And as the price goes higher, as the amount of sales go down, and that's how it is. But so this is interesting for the month of June. So you can see, like, from the month of June, but then from the beginning of the year to date,
Mhm.
you can see that, like, for example, here is 3,634 detached houses was sold around this range price,
Mhm.
1 to 1.25. That's a lot of houses. And also here, 2,559. That's like around 3,000 condos being sold
Mhm.
since the beginning of the year.
Yeah, and it's funny, like those are still nice numbers when you look at them as one-offs, but what I know we've seen as well in the condo market is a flooding of inventory, right? We have more units for sale than we've really ever had before in the condo space, which is great for buyers. Like if you're looking to pick up a condo, you've got a lot of options out there right now. And with those options can sometimes help bring better prices because there's the competition on the seller side to get sold. So there's some great buys out there right now for people that are looking to invest or purchase a condo for their end use.
Absolutely, Dylan, and it's also good for investing because also rent. It's a rental market. It's a very hot
Mhm.
rental market right now. So if you invest in a condo and you rent it out, you still, like making money. And I know now with the interest rates, things are getting a little bit challenging.
To
But
carry. Yeah.
yeah, to carry the cost of the rent and the mortgage. But obviously there is big demand for condo apartments, especially in zones like in my zone, in Mississauga or the Peel region, where we
Mm.
have a lot of newcomers.
Right.
I mean, like we expecting a million and a half newcomers coming in 2024. uh,
Mhm.
like I not sure about like the exact range of like like how many are they gonna come, but this is the statistics of the immigration, the government of Canada, the immigration, that they're gonna bring million and a half this year. And definitely this will put a lot of load on the market. So
Yeah.
more people, and especially newcomers, they're not going to buy a detached house. First, it's too expensive, and second, it's too big for them.
Mhm. Yeah, and I think what else is interesting is at least in terms of our sales volume, we're so far off the pace from where we were, obviously, in the years where the market was a little bit hotter. But people still need to move. They still need places to live. And with the new amounts of immigration, we got to have inventory for them. And so, in comparison, just looking at sales volume on the Toronto Real Estate Board, in 2020,
Hmm.
we did 121,000 sales. And the last 2 years, we've obviously had steep declines in terms of sales volume. So in 2022, we did 75,000 sales. And then in
Okay.
2023, we did 66,000 sales. So there is a ton of buying ability for the GTA just in general because it has always been a place for investors. There are a lot of people coming here. There's a lot of wealth in the GTA in general. So all those sales will return. I think our trend line typically puts us around like 86 or 87,000 sales. So there's a lot more units that are going to need to be sold in the coming years. And I think as soon as this interest rates continue to drop and we see affordability balance out, I think what we're going to see is all those people kind of flood back into the market because the population hasn't changed, right? So where a lot of those people gone, they've gone to the rental market, which has made it super competitive. We're seeing multiple offers on on rental listings for quite some time now, and I think that's only gotten worse as we've seen the sales volume drop on the other side of things. So, like you said, when we got newcomers coming in, whether they're renting or they're buying their first condo as a starter spot, there is going to be demand again for those type of products, even though right now we're sitting with a ton of inventory. So if you can take advantage of a buy now and hold on to it when that returns, I think you're going to see that growth in equity while you're buying what's in currently a little bit of a down market in that space.
Absolutely. And you can also see here, Dylan, like, kind of like 45% of the sales
Mm-hmm.
of the whole market is on detached house. So it's like kind of like, uh, and then the 27% of the other, like the like so pretty much we have 45% detached and 27% condo. So this is like the majority of the market. 75% of the whole market is going through these to these two products, which is the detached and the condo apartment. You can see also like condo townhouses, attached and detached, and other type of products. But I think these are the hottest two products right now.
Mm-hmm. Yeah,
And
yeah.
then you also,
They make
yeah,
up
and
the
now
bulk
you,
of our inventory there. But yeah, please go ahead with the all home types that I see you've got lined out here.
yeah, now you can see, like, for example, if you look at Mississauga, like, because I live in Mississauga, so, and a lot of my clients, they look at Mississauga market, and you can see like 552 sales.
Mm-hmm.
This is June. This is the month of June. So this is like a lot for a city of Mississauga. So that tells you the growth and the demand. Uh, of course, for example, you can see Oakville. That's another town, another city. That is also very very booming right now, and it has. I think it's like even higher. The average price is higher than Mississauga.
Right, right. And so when you're looking at this, looking at this page, what else are you pulling from it? What else is important to you when you're considering what you're going to be, how you're going to help be advising your clients?
Yeah, well, I also see the new listings and the active listings. So these are the two like parameters that helps us understand what's going on in the market. So, for example, the new listing for the month of June, you have 1,573 homes or listing,
Right.
you know, and the active listing is 2,041.
Oh, sorry, let me just take that off there. While I've got this up, I was just going to show total active listings when we're looking at detached homes in the GTA. And while we are
Mm-hmm.
creeping up higher a lot than we've seen in the last couple of years, we know that affordability and the interest rates have made that impact. We're still not as high as we've been historically. We're not at a new high in that sense. And I'm going to throw this back to you while I pull up the next slide. But
Okay.
that's good to know. While it all feels like everything's really slow. Just for context, we're not at our peaks in terms of how high active listings have been in the GTA when it comes to detached homes, which I think is important for
Yeah.
people to know. Like it may feel like there's a ton, and we are carrying more than we typically do, but we're not carrying the most we've ever carried. There have been three previous times where we're peaking higher than we currently are. And I think that with the interest rate cut that's likely coming next week, and hopefully another one in September, we'll see the buyer
Hmm.
pool increase as buyers return to the market.
I totally agree with you, Dylan. This is not the highest of the market, and I'm sure there will be more to come in the near future, especially with the updates of the Bank of Canada on the interest rates.
Yeah, yeah, I think it's going to be a positive for people. I know there's a lot of homeowners out there that decided to stay on fixed rates or had already locked in as they saw the rates coming up. But I talk more
Hmm.
and more, and it's usually to investors that stayed on those variables that are having the harder time, like we talked about, carrying the properties because their payments, their monthly carrying costs have increased by so much. And so, if I remember correctly, with that quarter of point cut that we saw back in June, that on a $700,000 mortgage, I think you were looking at about on average $140 monthly in savings. So we need a few
Hmm.
more to happen to help relieve the investors that stayed on the variables, or even homeowners that stayed on the variable. Like my cottage is on a variable, for example. So I'm very grateful that these cuts are coming because I want to see that come back down to where it was before, where it still made sense to stay on the variable.
Absolutely,
Yeah.
absolutely, and now is the best time to have that variable rate because of the market condition.
Yeah. And so as we're kind of wrapping up here, what's
Mhm.
one thing that you want to make sure people take away from the changes and what's going on in the market? Like, is there anything that you think that people should be paying attention to? Anything that they should know? And how do they get a hold of you?
Sure. Well, I mean, like knowing what's going on in the market, like even like for example, you can see that parameter average selling price for over listed price.
Hmm.
So you can see like some of them that are over 100%.
Hmm.
So uh, so that also gives you an indication of the market now. Probably we're gonna have a lot of multiple offers. Once the price will go down, I think now is really good time. I think it's if you ask me as an investor, I would say this is the perfect time to invest in a property because now all like a lot of inventory, the price is not very expensive, and now if you invest now you're going to take advantage of the low prices because they're going to go up again once the
Hmm.
interest rate got reduced. And yeah, like to get a hold of me, you can always send me an email, call me on my cell phone. You can also follow me on my channel on YouTube, Frank Real Estate Services.
Nice.
And I'm trying to release more videos in the future to give an updates about the market and what you need to do, how you need to prepare. you know like uh, it's not a I know, like, it's not an easy decision, but I'm here, and we're here to help you make the right decision, do the right move. Everything is under our control. Like, we're watching the market very carefully, we're knowing what's going on. And I think this is the best time to invest. Even if you go, like, for example, there is another stat I like to also show here. For
Hmm.
example, this is like existing home transactions, and this is all only in Mississauga. And you see, like, the sales or the number of transactions you have by different zones. So, for example, the city center, can you imagine 194
Hmm.
sales,
Yeah.
just here on Ontario Street, for people living in Mississauga. That's why I say, like, Mississauga is booming. And now with the installation of the LRT, the here Ontario LRT, that they're gonna connect like the lakeshore with Brampton. I think this is gonna be a really hot spot for investors and also for newcomers.
Nice. Yeah, I think that that's all very important for everyone to know, and to make sure that they reach out to you to have a deeper conversation on what it might mean for them and what their particular pocket is doing. Because, like you said, city center outperforming other areas. Excuse me. Not every pocket is the same. Not every neighborhood is the same. That's why in real estate, everyone always says location, location, location. And so that's why you need to reach out to Frank, particularly to make sure you have that discussion and find out what's going on in your world. And I think a great reminder is, the adjustments that we've seen in the housing market in the last couple of years have mostly been influenced by Bank of Canada policy and them raising those rates to try to combat the inflation that we've been seeing since we printed all that money during COVID. So it's kind of that exterior force that has impacted affordability so much, but it hasn't solved any of the problems that got us there. We still have so many people coming to the GTA. We don't have enough homes being built. And so ultimately what that means is, on the other side of this, as we kind of fix our challenges that we're having right now, specifically with inflation and our GDP for that matter, we will see the market come back around, because that demand will be there with the sheer amount of people that we have coming in and the growth opportunity in terms of business in the GTA. So yeah, if you can afford to buy in now while the carrying costs are a little bit higher, you're going to see the gains in the equity growth as the market turns back around, because everything just goes in cycles. So if you look back on all the times where you've been like, man, I wish I could have bought 10 years ago when they bought, because they bought at the perfect time and now their home is worth X amount more. Well, this is one of those windows. You just don't have the future proof of it yet. But we do know that the market's down, and we keep going through these cycles. So this 10 years from now will be that time when everybody's saying, man, I wish I had bought 10 years ago, because that would have been the perfect time for me. So with that in mind, just make sure that you reach out to Frank to have a great discussion. Frank, thanks so much for having me with you today and joining you to have this discussion. I look forward to us chatting again soon.
Thank you so much, Dylan.
Very
I'm
well.
looking forward to it.
Absolutely.
Thank you.
Bye for now.
Bye. Take care.